So students, welcome to another video of the accounting course. In this video we'll be doing it's a practice question based on the Fifo and Weighted average method, so let's just get straight right on it. Now we're selling energy drinks, guys, right? As you can see, we are selling energy drinks, right? Fine. So, and we're having the number of units, the rent, and the amount, right? Number of units, rent, and the amount here. And these are our sales, opening stock, purchases. So that, and you can see here, you can see everything. Let's just get to the required. Number one says value of the closing stock. Let's calculate. We are calculating. Assume that the financial year ends at 28 February 2021. So we are required to calculate the value of the closing stock using the Fifo and weighted average method. So you must calculate first the value of closing stock using Fifo and weighted average. Let's start with the Fifo. We're calculating what? Value of closing stock, right? Value, not number of units, value. So you want to calculate how much is the cost of the closing stock. Fine, let's start with the Fifo. So the Fifo, like I said, the first items that are bought in, they must be sold, and that means the items that will remain are the most recent items that were bought in the business. So fine. So guys, already here we have the number of units of closing stock, 2.4. Right, we have the number of units of closing stock, which is 2.4. So we know that we have 2,400 units that are in the business that are remaining, but we must now check they are from which months, because as you can see, we had opening stock here 320 units, right? We had 320 units of opening stock. We also purchased 4.8, right? Purchased 4.8. This is 4.8 is the addition of this. They added all of these together, right? They added all of this, and then now we have closing stock of how much? 2,400, right? So the easiest way to deal with such a question, you must just work backwards to say this 2.4, it consists of stock from January because it's the most recent one, and it also consists of some of the stock from October, because when you say 2.4 subtract 1.2, right, you're going to get 1.2. So it means this 1.2, the 2.4 consists all of the stock from January, 1,200 of them, and then how much is left? 1,200 here for October. So out of the 2.5, 1,200 of them is for October, because we know that we must remain on hand with stock on hand for the items that we bought most recently, right? So after doing this, of course, so let's just write the calculation to get the marks. You'd say the closing stock for January is 1.2, and closing stock for October, it's 2,400 subtract by 1.2. Right, this is units, which is equals to 1,200 units. Now when you want the value of this closing stock, you're just going to say for January, the 1.2 you multiply with the cost price, right? It's the Fifo, it's not weighted average. You multiply with the price. How much is the price? Is 13.30, which will give you 15,960, right? And then when you're calculating the for October, the value of closing stock for October, you're just going to say 1,200 units multiplied by 12.42. This is the cost price of the October items. So how much you're going to get? 12.42 times 1,200, you get 14,904. And then value of closing stock using Fifo is what? 80,864. That's the value of closing stock, right? Using the Fifo. Using weighted average, remember, using weighted average, value of closing stock, you must first calculate what the average cost price of each item. Average cost price of each item, because we value the clock on the based on the average cost price of each item. And how do you calculate the average? You say total purchases divided by total number of units of purchases. So we include all our purchases. This includes even the opening stock, right, guys? Not only the purchases for this year, it also includes the opening stock, because we also purchased it, some time. So it includes the value of the opening stock as well. So in other words, for weighted average, since we know that 2.4 is our closing stock, right? And it's weighted average, right? It's weighted average. So let's just calculate total purchases. It's simple. You're going to add the 2,880, because the 2,880, reason being we purchased it some other time, right? So you also add the opening stock, and then you also take what the total here, which is this one, the total of the purchases, which is this one, is plus 58,560, right? You see, guys, so you took opening plus all the purchases, you divide by number of units. How many were these? 320 units, and then these were 4,800 units. You're going to get the average cost price here, which is 2,880 plus 58,560, right, divided by 320 plus 4,800. What do you get? You get 12 rands. This is the average cost price of each item. So now the next step is what? To calculate the value of the closing stock, because we now have the number of units that are remaining. So this is what we're going to use to value our closing stock, the average cost price. So value of closing stock is equals to 12 multiplied by 2,400, and it will give you 28,800, guys. So that's the value of closing stock using the weighted average method. I think it's simple, right, guys? Fine. Number 2, calculate the cost of sales. We're calculating cost of sales here. Cost of sales using the Fifo and weighted average methods, right? So cost of sales. So it's simple, guys. For cost of sales, since now you have identified the number of units, so number of units bought, or you can use the same method that you use to calculate which of the items are remaining, from the 2.4. You have your number of items, so 2,720. So you can also work backwards to say that this 2,720 consists of items from here and items from here. Okay, this is the total. So guys, so it consists of items from opening stock from here, and items from April, and items from October, like some of items. And it's obvious that here that since 1.2 is on hand, 2.5 minus 1.2, it's 1,300. So we sold 1,300 items from October, and here we sold all of the April items, right? And here we sold 320 items. When you add this, it will give you 2,720. Right, so you just use the same procedure you used to calculate to determine which of the items that we bought are from which months. You see, so you have 2,720 units sold. You know that the items that are first brought into the business, they must be sold first, which are items from opening stock, right? And items from April, the energy terms from April. And as you can see, 1.1 plus 320 is 1,420 so far. It means we are still remaining with some items that we sold from October, which are how much? 1.3. Fine. So since you're calculating cost of sales, you must multiply each by its cost price. So meaning you're going to say 320 multiplied by 9 for the opening stock, plus 1,100 multiplied by 10 rand 50 plus 1,300 multiplied by 12 rand 42, because you're calculating the cost price. So this is the cost of sales. I mean, this is the cost price of each item that we sold. These ones are the cost prices of each item that we sold, and this will give you, let's see how much. That's 2,880 plus, for this one, 11,550 plus 1,300 times 12.42, which will be 30,576. Right, it's simple. So meaning when you calculate the sales as well, but here you use the selling price. When you calculate the sales, you use the selling price, meaning this will be the selling price. When you calculate sales, this, instead of 9 rand, it will be 21 rand 20. Selling price here 21 rand 20, even here 21 rand 20. Right, fine. Now calculate cost. This is the cost of sales using Fifo. Using weighted average method is just easy. You have your weighted average price, it's 12 rand. So you're just going to say that 12 rand multiplied by number of units sold, which is 2,720. You get your cost of sales, which is 32,640. Right, that's the cost of sales. Fine. Number 3, calculate the gross profit. Gross profit using the Fifo. You have your sales. How do you get your sales? You use the same analogy here, but instead you'll be multiplying with the selling prices, right, of each item, meaning it will be 320 times 9 rand plus 1,100 times, 320 times 21 rand 20, because it's the selling price, right, plus 1,100 times 21 rand 20 plus the 1,300 here times 21 rand 20. So I'm using selling prices here, right? Selling price, because I'm calculating sales. Here I was using cost prices, right? Cost prices. And then this will give you how much? Let's see. This will give you that's 320 times 21 rand 20. So this will give you, and in fact it's just easy. This is just easy, guys, because even if you took the 2,720, since the cost selling prices are the same, the reason I did this is because sometimes the cost prices, they might be different. The selling prices, meaning the selling price for the opening stock might be different from the selling price of the April stock and October stock. So you must do this method. But since the selling price is the same, you can just take the 2,720 and multiply it with the 2120. It will give you this. But even if you do it like this, this is done for purposes if the selling prices here are different, right? Fine. So your gross profit will be 57,664 minus 32,640, which will give you 25,024 rands, right? 25,024 rands. That's your gross profit based on the Fifo. Based on the weighted average method, weighted average, you know that your sales will just, the sales price won't be different, guys. It will still be the same. What will be different is the cost of sales. So you subtract how much is the cost of sales for weighted average. It's this 32,640. Okay, so this 32,640 is for the weighted average. The cost of sales using the Fifo is 30,576, right? So about that, guys, 30,576, and then this one is your 32,640. So this one will give you 25,024, and then this gross profit for the using the Fifo method will give you 27,088. And if you compare these, guys, if you compare these two, you see that the cost of sales using the Fifo is higher than the cost of sales using the weighted average. You see, so guys, so as we said, you must be consistent in the method you use, because you don't want you to manipulate the financial statement. from January to March you start using the weighted average, because you see that it generates a lower cost of sales, meaning it will generate high profit. You see, so that's the importance of being consistent when choosing the method that you'll be using, guys. So the most important thing, the most thing I want to stress on is for you guys to be able to determine the number of units from each month, as I did here. That's very much vital, guys. For first in and first out method, you must work backwards. You must be able to identify which units are remaining, and the units which are remaining in the business are the ones that we bought most recently. The ones that we sold are the ones that were bought like before, like that were bought a long time ago. So guys, I hope this video was helpful, and if you have any questions, just post them on the site and I'll address them. Thank you.